Welcome to this short lecture course on what is retained earnings, and this is part of the Understand Accounting in 5 Minutes lecture series presented by Stratfield Solutions. So today we're going to be looking at what is retained earnings, and retained earnings is an accumulation of all profits or losses of the business from the current and prior years. So we look at the current year and all of the previous years and take a accumulation of the profits or losses and use this account to track those across time. It is part of the stockholders' equity, and that appears on the balance sheet, and it's usually a positive amount unless the business has incurred significant losses since it started. So for the most part, if you're looking at retained earnings, you would think earnings being a positive amount. So usually it is, unless there's been a lot of losses that the business has had since it started. Finally, this is the account that dividends are paid from. So retained earnings is used to pay dividends to shareholders. So the next question is, why do we have retained earnings? Well, as a business earns income each year, they have the option to keep the income, hence the word retain, keep, very similar, or they might distribute the income to equity holders through dividends. So they have a choice. Some businesses keep all income in the company. They retain all of it. Others pay out some or all of the income through dividends. The choice to pay dividends or not is based on the business goals or the owner's preference, meaning do owners want to receive payments in the form of dividends, or do they prefer the business retain earnings and use those for future growth? It's really a choice based on the type of firm and where it is in its corporate life cycle. So now to account for retained earnings, at the end of each period, the company's books are closed, which we discuss in another lecture. And once the books are closed, we look at any additions. If there's a loss, it would be a subtraction. But we look at the addition to retained earnings from net income, and we calculate that. The business may or may not declare a dividend payment, which we just talked about. And then the ending retained earnings balance is calculated. Now, the easiest way to calculate changes in balances is to use the base method. Now, we look at the balance from the beginning, and we then work through each of the changes to come up with the ending balance. So the B stands for beginning, and in this case, it's the beginning retained earnings at the beginning of the period. We add the A, net income in this case, so beginning retained earnings plus or adding net income. The S, or subtraction, would be dividends here. And then finally, those combined will equal ending retained earnings. So we have the base formula, beginning retained earnings, adding net income, subtracting dividends if they're paid. This will equal the ending retained earnings. So to wrap this up, let's do a quick practice example. The beginning retained earnings of XYZ Corp is $100. During the year, the business had net income of $80. If ending retained earnings is $150, how much in dividends were paid? So this time, the variables on the dividend line. So using our base formula, we will start with the beginning retained earnings. That is stated at $100. We add the net income, and that was $80 in this period. We're going to subtract dividends here, but we do not know how much the dividends were paid out. And that's what this question is asking us to solve for. But we do know that the above will equal the ending retained earnings. So 100 beginning plus 80 net income minus the X unknown dividends will give us 150. We'll set up the basic algebraic equation here, and this will end up with a variable X equaling $30, which is the dividends paid. So this is a good practice example to walk through the base formula and also explain how the changes in the retained earning balance accumulate over time and reflect both net income and subtracting out dividends. So hope you've enjoyed this short course on retained earnings, how to account for them, and why some businesses have retained earnings and others may not if they choose to pay a dividend. We look forward to seeing you in the next mini-series course presented by Stratfield Solutions.